Alrighty, folks, we need to talk about inflation. We need to talk about some record housing prices. And yes, I am coming to you from a bathtub. Folks, I put out a video earlier this morning showing you kind of the suite that we're staying in here in Vegas, and I just had to know how big this bathtub is, and it is huge. So I thought I would record a video from here just for a different background. So let's get into the daily financial news. Let's start off with inflation. Inflation, we need to remember a couple of things. One, the favorite metric for the Fed to look at is called PCE, Personal Consumption Expenditures, specifically PCE core, which doesn't include food and energy. Well, we got that number this morning, and I don't know how to sugarcoat it, so I won't. It was worse than expected. PCE core. Right, PCE core came in at 4.6. It was expected to be 4.5. On a month-over-month basis, it came in as expected at 0.3. So what does this mean? Well, I think it means a couple of things. One, you're locked in for a 25 basis point move next Wednesday, which I believe is May 3rd. Second, it now puts a series of rate hikes. And this is something I haven't talked about before. I've been pretty adamant that I believe we got a one and done scenario. I still believe that, but I am now open to the idea that we will could have one or two more after this one. Now let me explain why I'm holding to my call of one and done. I still believe, and until proven otherwise, that the economic data that will come out after the Fed meeting, but before the next one, is going to show the economy slowing down significantly. But as of today, with the numbers we had from PCE core, what we've had from other CPI readings, remember, was it 10 days ago? CPI, the one that you and I probably think of as the inflation gauge, the CPI core also went up. It broke trend. That is not good. And as I shared after that surprising headline drop to 5%, I believe that headline CPI will go up next month, breaking its 9-month trend lower. A lot of that has to do with the base effect. A lot of that has to do with rising food and energy costs in the last 3 or 4 weeks. So we need to buckle up. See, inflation battle is not over. It is simply not over. And, you know, we still have housing to go through. It won't roll over until August. We've talked about that a bunch. And services after that. So again, inflation is going to be stickier. It's going to stick around longer. So not good. On the consumer front, it looks like income went up 0.3% and spending was flat. So again, we're going to see more stuff go to savings if that holds true. So again, it's the inflation battle is not over. It will be interesting to see the Fed meeting, the Fed notes, because again, it's just not over. On the earnings front, a lot of kind of mixed messages, right? We got news from the big banks first, generally very good. We got some stuff from the big tech, generally pretty good. But when you go down to the next level, not so good. So we had some companies like Snap, for example, just miss top, miss bottom, just blow up. I heard somebody refer to it as a broken company. Cloudflare, miss top line, miss bottom line, lowered guidance. What I think is going to happen in the software space, again, where my history and experience is, we're going to see longer sales cycles. We're going to see maintenance streams cut. It's going to be a lot of churn and a lot of lift. So expect a lot of software companies to report troubled sales cycles, I guess I will call it. Intel, interesting enough, reported the largest quarterly loss in company history as it kind of tries to put it in a bottom and turn the corner. Amazon appears to have beat top line, beat bottom line, and I think raised guidance. I don't believe their analyst call was as rosy as the first release, so that will be interesting. I have not read that this morning. First Republic, First Republic we talked about a bunch of times. We talked about them losing $100 billion in their last quarter. They're now seeing talent drain. At this point, it'll be, if you're good, right? If you have a book of business at First Republic, you are being headhunted like crazy. So I think they just lost another team that produced over $1 billion in business for First Republic to JP Morgan or someone. So First Republic is not in good shape, both from a deposit base, which I believe is probably picked up again, but also a talent base. Very interesting. Lots of layoffs to talk about, unfortunately. Dropbox is laying off 16%. Lyft is laying off 26%. Heard this morning that Jenny Craig is talking about mass layoffs. So again, this news is starting to ripple through the company. It looks like Jenny Craig's actually up for sale, which sounds like the acquirer may want to reduce some headcount. So pretty interesting stuff. I did find I was at this event in Vegas. I wanted to share with you something I thought was interesting. There is a site called Futurepedia.io. Futurepedia.io. It lists all of the AI tools. The reason I'm sharing this with you is I was shocked or surprised about not all, but some of the larger operators were really leveraging some AI, both for advertising, for target markets, doing a lot of research. They were researching markets with AI, which I thought was really interesting. So again, apparently Futurepedia.io is a place you can go to just to see all the various AI tools that are out there. So take a look. I have not looked yet, but I noted it down because I wanted to share that with you. I don't know if you've seen record house prices near you, but apparently the Hamptons, that Richety Rich place, is now a record $3 million, at over $3 million. The average price of a house in the Hampton has exceeded $3 million, up 18%. But even in the Hamptons, they are suffering from no inventory. Their transactions were down 57% in Q1. This really goes back to my thesis that the luxury market is not very active, right? The luxury market is not very active. So again, it's the low end, the entry level, the first time home buyer. You and I have talked. You and I did a video the other day. It is on fire. Multiple offers, over asking, but the luxury market is cold, with the Hamptons proving it, down 57% in transactions. I think it is really interesting to hear the spin on folks who are locked in with 3% mortgages. There's a lot of talk about golden handcuffs and being trapped and all of that. I mean, man, we can make a good thing sound bad, can't we? You know, if you have a 3% mortgage and you're trapped, I mean, it will likely be the best asset of your life. You can always become a landlord, an accidental landlord, right? Wasn't your plan. You can stay put and build equity faster given such a low interest rate. And of course, you can renovate and stay in place. It's not like the house has to stay the same. So I think it is really interesting to hear people be upset that you have a 3% mortgage. You know, if you don't want it, you can sell. You don't have to stay there. So pretty interesting. The last thing to kind of talk about today, CBRE, commercial broker, transactions or net income is down 70% because there are no transactions. It is a severely constrained capital market. To hear the operators here in Vegas, they had capital markets, they had debt markets, they had all this talk. There's no meeting of the minds between buyers and sellers. Sellers obviously have yesterday's prices in mind. Buyers dealing with higher rates and cap rates going down. Pretty interesting. We've had lots of talk about values. Like if you have a cap rate of 4 and it goes to 5, the value of the property, all else being equal, can fall 25%. So there's a lot of talk about value. There's a lot of talk about busted deals. They did highlight that there's more foreclosures coming. One of the speakers talked about, hey, we just got basically a broker price opinion for some more apartment foreclosures in Houston. Not sure what's going on in Houston. Obviously, there was that 3,200 unit building or collection of 4 buildings that went out in less than a year. It sounds like there's more pain coming. So pretty interesting. Again, folks, inflation is not over. I do believe we get a quarter point on May 3rd. It will be very interesting. I believe Jerome Powell will be forced to talk about more. We will do more because, again, PCE core up more than expected. CPI core broke trend. and I'm fearful that in May, headline may break trend. So anyways, folks, I thought I'd do this recording from this gigantic bathtub. It is as big as I thought it was. So take care. Hope you enjoyed it. Bye.